Ethereum made a lot of headlines leading up to the Shanghai hard fork and the Shapella upgrade on April 12th. Shapella was the biggest advance for the Ethereum blockchain since the merge in September, and it enabled ETH validators to unstake their Ether at will for the first time. My guest today is Michiel Milanovic, DeFi Strategy and Product Analyst at ConsenSys and co-author of their recent guide to ETH unstaking. Michiel, welcome to Kitco News.
Thank you for having me.
Very glad to have you. We had a lot of action in Ethereum over the recent weeks, so it's really great to speak to someone who can drill down into the implications of this for us. So let's begin with the token. Markets obviously saw a strong rally for ETH in the immediate wake of Shapella. We saw it rise to over 2,100 by the 16th, and it's since retreated to just about exactly where it was at the beginning of the month. We're hovering around 1825 or so. What was happening on Ethereum during this period of time?
Yeah, it's a great question because I think generally, leading up to Shapella, there were kind of three main things that were being discussed. The first one is, can the Ethereum Foundation execute well on the next major upgrade on the roadmap? And that was a success from what we saw in Shapella 2 weeks ago. So I think that was a positive reaction from the community. The second thing is withdrawals from long-term validators. So leading up to Shanghai, the Shanghai upgrade, long-term validators who have staked their ETH for up to 2 years by that time were not able to redeem any of the rewards or unstake their ETH. Following the Shanghai upgrade, that changed, and they can now finally redeem that ETH and unstake their ETH. So post-Shapella, we're seeing some of those withdrawals starting to take effect. That being said, at the same time, not all staking providers were able to enable withdrawals for their investors at the same time that the upgrade went live. So there are certain technical aspects that take a few weeks. And for example, if we take Lido, which is one of the largest liquid staking providers, they're not enabling withdrawals until early May. So there's been kind of a reduced impact from withdrawals. But there's also been positive impact from the fact that the Shanghai upgrade went live. And then the third kind of factor is new staking following the upgrade. And what we've been seeing so far has been an influx of stakers who are now staking ETH because it likely fits the risk profile better, given the lowered liquidity risk associated with staking ETH now that withdrawals are enabled.
Right. So the big move here, we saw a fair amount of selling, but we saw way more buying. I mean, we saw the price going up significantly. One of the fears in the wake of Shapella was that we were going to see massive downward pressure on ETH prices because we were going to see suddenly an enormous amount of liquidity, an enormous amount of unstaking all at the same time. So we did hear from some technical people explaining to us, like you said, not everyone can unstake immediately. Also, there were technical limitations to how much you could unstake, how much the network would process of these unstaking requests in a given day. So that obviously limited the downside pressure. So where was the upside coming from? Where was this? What was driving this big move in price? Was it optimism for the implications of this upgrade going forward?
Yes, I think similar to what we saw in the last upgrade when we had the merge back in September, there was positive reaction from the wider investment community, from the wider Web3 community around successful execution on the Ethereum Foundation roadmap. And I think, from what we saw at the merge was also positive price reaction. What we're seeing now is likely a follow-up on that as well.
Right, so we're adding more flexibility, we're switching to proof of stake from proof of work is one step, and now we're adding a lot more flexibility with the ability to unstake. Validators can be unstaking essentially whenever they like. So we saw maybe 1.37 million is a number that we've seen withdrawn since Shapella. How much new staking are we seeing? How many people are staking for the first time, perhaps? And how many people who unstaked in order to test are now coming back in with more now that they know that they can take it out anytime they like?
Mm-hmm. Well, I think one way of answering that question is to see what are current validators who have been validating the chain for the past few years doing post-Shanghai. So we were expecting, or the community was expecting large withdrawals following Shanghai, but in reality, the validator set is largely split between long-term and short-term validators. Short-term validators are mostly the liquid staking providers, such as Lido or Rocket Pool or even Coinbase. Following the Shanghai upgrade, a lot of those liquid staking providers are actually betting on setting up new validators rather than withdrawing the ETH. So that sort of speaks to the demand that at least from a liquid staking perspective, these validators are expecting post Shanghai. And in terms of the levels that have been staked post Shanghai already, that's been fairly limited to what we would expect to see moving forward, largely because not all staking providers have enabled withdrawals yet. So there's likely capital still on the sidelines that is waiting to be deployed. But that being said, if we look at some of the top institutional staking providers, for example, if we look at Staked US or Kiln, we've already seen over 100,000 ETH being staked in the past 2 weeks alone, which is more than what they did in all of March. So from that perspective, we're seeing increased demand for staking.
Great. Yeah, we'll get into the details on the institutional side in a sec. But if I'm understanding what you're saying, the liquid stakers are going to represent a lot more kind of market participants. They're going to be people who are getting into staking not because they're long-term validators, they're part of the, you could say, core Ethereum community. But once you can get your money out, then it's much more plausible and much more profitable to be putting your money in, and then it becomes kind of a trade. It becomes a trading move. It becomes a tool for people who are thinking more short term. So is that where we're going to see the swell of interest and ultimately the growth in new investment coming out of Shapella? Is it going to be driven by the liquid stakers who are kind of bringing the trading community more into Ethereum staking?
Yes, and on that point, if we think about the amount of capital that's been waiting on the sideline to be deployed post Shanghai, a large factor from an investment perspective and participating in staking is not because you want, from a technical perspective, to be validating and doing the work to validate transactions on the Ethereum blockchain, but more so because you have access to the yield that you can get on your holdings of ETH. And prior to Shanghai, there was a large degree of liquidity risk associated with staking ETH because you didn't have the ability to redeem the rewards or withdraw it. Post Shanghai and post a successful Shanghai, we expect that capital to start flowing in now that some of that liquidity risk has been reduced. And with liquid staking providers in particular, there's more opportunities for capital efficiency in that sense, because you can also use the staked tokens the kind of stake derivative tokens that you get on the back of staking ETH with one of these providers. You can use those to gain additional yield in the wider DeFi ecosystem.
All right, so it's really creating multiple layers of what amount to trading arbitrage, trading opportunities for people who are more traders, less DeFi builders, or less blockchain developers, and more of the broader community is now seeing an opportunity here. All right, well, let's look in a little more detail at the institutional side. So you do a lot of work, ConsenSys does a lot of work on the institutional adoption front. We saw from CoinShares, they saw around 17 million in inflows from institutions in particular just last week. What are you seeing what kind of movement are you seeing on the adoption front, the institutional adoption front? Was Shapella a watershed event for institutional participation in Ethereum?
Yeah, and on that front, we've been tracking staking from leading institutional staking providers over the past couple of weeks. And since Shanghai, what we've seen are inflows of above 100,000 ETH being staked so far from these institutional stake providers. So the likes of Staked US, Kiln, Bitcoin Suisse, companies like Figment, who allocate capital on behalf of institutions. So seeing those inflows that are currently larger than what we've seen in the 3 months prior to Shanghai, it likely speaks to the fact that post-Shanghai, staking ETH might fit the risk profile better of many institutions and those who are waiting with capital on the sidelines to be deployed, but were kind of subject to that liquidity risk still before Shanghai associated with staking the ETH, are now increasingly coming forward and allocating capital towards ETH staking.
All right. Well, we've also heard from Vitalik Buterin. He's said that scalability is going to be the focus going forward for the next Ethereum upgrades. Ethereum core developers met on Thursday. They're now working on Cancun-Deneb. That's our next catchphrase for the next upgrade. That's scheduled for later this year. What is the key contribution of this next upgrade?
So the key theme of the next upgrade is scaling. So we saw that with the merge in September, we saw Ethereum move to a proof of stake blockchain, consuming up to 99.9% less energy than it used to before. Now we have a successful Shanghai upgrade that enabled ETH withdrawals that will likely contribute to increased ETH being staked on the blockchain, which in effect increases the security of the ETH network. And then the next step on the ETH roadmap is enabling higher scalability. So through proto-dank sharding, we are expecting to, well, the Ethereum community is expecting to increase the scalability of the blockchain. And it comes at a time when we've seen increased usage and capital being allocated and migrating to layer 2 networks so far, who leverage, and these layer 2 networks leverage Ethereum as a settlement layer. So ultimately, as we're seeing capital migrating to layer 2s, which are already scaling solutions on Ethereum, together with proto-dank sharding, it will be largely complementary to the Ethereum roadmap topic, which is scaling the blockchain.
Right, and how long do you think it will take for us to see higher levels of throughput on the network? Assuming that, obviously, like you've said, just post-Shapella, we have many more partners, much more liquidity just coming from the layer 2s, bringing in essentially a new market, a lot more interest, and that's part of the solution. But as far as scalability and throughput, when do you expect to see that significantly improving?
Yeah, I think currently what we're seeing is mostly scalability being focused on layer 2 networks, like you said. There's a lot being done in terms of innovation, in terms of the layer 2 technology. So we've seen the last 2 years, we've seen large growth in optimistic rollups on layer 2s that are aiding scalability. And now more recently, we're seeing large growth on zero knowledge rollups. And these ZK rollups, as they're called, are more secure and are more scalable than their optimistic rollups kind of counterparts. So the focus will largely be on their growth. And so far, some of these are on testnet, but some of them are already live on mainnet, meaning that they're contributing to the primary Ethereum blockchain that is live already. And that throughput has been much higher than what we're seeing on Ethereum. But that's partly also the solution, because if we're thinking about Ethereum as the settlement layer in the wider Ethereum ecosystem, then that throughput does not necessarily have to be going through Ethereum. What's most important from the Ethereum perspective in that sense is being able to be a secure network and securely validate those transactions. And I think Shanghai in that regard was a really large step towards that.
Right, because the goal is not to have Ethereum end up monopolizing all of the traffic. The goal is really a major advantage of the Ethereum blockchain is that it is supposed to be the backbone of DeFi development, broadly speaking. So if layer 2s are going to do an enormous amount of the work going forward, that's good for Ethereum, it's good for layer 2s, it's good for the ecosystem.
Exactly. Yeah.
All right, now what do you expect to see driving the Ethereum blockchain development going forward? What's the outlook at ConsenSys for 2023? We now have Shapella behind us. We're now looking ahead at the next upgrade. But where is the interest coming, perhaps in the market, on the institutional side, in terms of technological development? What should we be watching out for the rest of 2023?
Yeah, so one thing that I already touched upon are the layer 2 networks. So we're seeing large traction on layer 2 networks. The next innovation within layer 2 technology have been ZK rollups, so the zero knowledge proofs, that are an advancement on the current optimistic rollups that have been driving kind of the layer 2, some of the layer 2 landscapes in the past year. And with ZK rollups, we expect to increase, the scalability of Ethereum ultimately. And ConsenSys itself, we've recently launched our own ZK rollup called Linea. And part of the use cases generally within that layer 2 ecosystem and within the blockchain ecosystem that's starting to gain traction more broadly has been, corporate adoption of NFTs that we're seeing. More and more corporates are experimenting with NFTs as a solution for customer relationship management. Loyalty programs are being run through NFTs. Similarly, we're seeing, fashion brands getting involved. And the way that some of these corporates are starting to approach the space has largely been from a user experience perspective, which is a very large component of enabling large-scale adoption of Ethereum and blockchain technology in general. So as some of these corporates start to advance some of their programs, as they start to go live, we've seen already some successful ones being deployed. But as that kind of ramps up and through the scaling technology that enables, large throughput as well, these two things are very complementary, and it's something that we're definitely watching moving forward.
Right. So this is an interesting area of institutional adoption, which doesn't get perhaps focused on as much in the wake of Shapella, is we see companies like Starbucks rolling out major, it's a big commitment. This is, they've been working on this for at least a year now, and they've had at least two levels of rollout of their customer rewards program, which includes NFTs, includes, it's essentially a crypto-based program. And very, very NFT focused. But this is essentially bringing, if they're bringing all their customers, if they're creating a customer rewards program or a customer engagement program that leverages NFTs, then they're essentially creating an enormous number of customers who suddenly have an interest in understanding NFTs, in watching the NFTs that they perhaps even accidentally acquired through this program. The same way you'd get stamps on your little card towards a free coffee. Now you're gaining NFTs. And you're going to get that level of engagement from a huge customer base that has not necessarily chosen to invest in crypto per se. But here they are, invested in crypto because now they're part of an NFT rewards program. How significant do you think that is for the broader ecosystem, that we have companies with the reach of, say, Starbucks, bringing their customer base into the NFT space?
Yeah, I think that's a great question. And it's very important that we see that adoption from the mainstream audience, from from corporates and their user bases as well, because that's not purely driven with an investment mindset. So when we think about the activity that we've seen over the last 4 or 5, even 10 years that blockchain's been around, a lot of it has been focused on extracting maximum value, and that's something we've seen with the growth of the DeFi ecosystem. The DeFi ecosystem still accounts for a very large part of the overall blockchain ecosystem across not just Ethereum, but outside Ethereum as well, much larger than NFTs or gaming, for example. And that's largely driven by the fact that in those first instances, in that early adoption phase, a large part of it is getting investor appetite into these things, and people try to find ways that they can make money. But ultimately, through scaling solutions, through these upgrades that Ethereum is going through, it enables corporates and institutions to start leveraging the benefits of blockchain technology for their internal operations. And that does not necessarily even mean that users need to be aware in the back end that things are powered by blockchain technology. It avoids some of the complexities that currently exist. But through the safe and careful kind of deployment of blockchain technology that's enabled by new and innovative solutions, corporates are able to kind of offer superior experiences for their customers through blockchain technology. And once you start seeing those solutions emerge through the likes of Spotify, but also through the likes of Nike, that's when you start to see really large scale adoption, because all those activities ultimately represent transactions and users on the blockchain, which then ultimately also means that Ethereum is being used, the Ether tokens being used to verify transactions, to pay validators. So that's definitely a path to kind of mainstream adoption.
Right. Well, thank you so much, Michiel. This is it's been really, really great to get your perspective on this. We've gone to some places that we haven't gone yet in this conversation with you, so I really appreciate it.
Thank you very much.
You're watching Kitco News. I'm Ernest Hoffman. Don't forget to subscribe to our channel.